Right, let's crack on, and then we can other people can join us as they do. So, hello and welcome to this Cornet breakfast event, looking at developing a blueprint for the future relationship between landlords and occupiers. I think COVID has brought landlords and tenants together probably like never before. Two parties who only really ever met occasionally, sat down together and had really open and honest conversations. And in many cases, they've moved past their kind of previous like transactional relationships to adopt a perhaps far more partnership approach and really to support each other through the pandemic. But as the end of the pandemic is hopefully in sight, I guess is there a risk that the two sides will kind of return to the opposite sides of the ring and never to talk again? So that's the kind of background for this event, with the idea that today we are going to bring some landlords, occupiers and a managing agent to really discuss a blueprint for the future relationship between landlords and occupiers. My name is Kathy Hayward. I work on the I work on the Cornet Events Committee in a voluntary capacity, and I also have been writing about the world of work and workplace for the past 20 years or so. I'm going to be facilitating the event today. Just to go through a few bits of housekeeping before we start, we've got a number of upcoming events, including our first face-to-face event for over 15 months, which will be an outside architectural walking tour in July. And so the date of that will come soon. And hopefully in September, we'll be able to do another one, which will be a boat tour. But we'll keep you posted on that. And they will all be on the Cornet UK chapter website. So we couldn't do any of these events without our sponsors. So a big thank you to IWG, to Savills, to the Office Group and TP Bennett, who support us and allow us to put on these events for our members. And finally, on to our speakers, who I will introduce. I should say that part of this event came about through a conversation I've been having with both Stuart Cranner and Mark Tyson, who are representing landlords today, that we've been talking about probably over the past year or so, and with Mark before. So I was just muted then, so apologies for that. This event kind of came about for discussions I've had with Stuart Cranner and Mark Tyson, who are on our panel today, very much talking about how they're already changing their relationship with their occupiers. So we've been talking about this a bit before COVID, but certainly COVID has accelerated that. So in terms of introducing our panel, who are going to talk today, Mark Tyson said he's representing the landlord perspective. He's head of property operations at Legal and General Investment Management and is responsible for all property and facilities management operations across 850 properties in the UK, following an 18-month transformation programme to implement this new occupier-focused operating model, which I'm sure he'll mention a little bit. Stuart Cranner is also representing the landlord. He's head of real asset services at Aviva Investors and is responsible for leading the development and delivery of a suite of business services supporting the growth of the real assets business at Aviva. This includes reshaping how property management is delivered across the real estate investment portfolio to meet the changing needs both of the investors and of the occupiers and communities. Stephanie Moore is coming at this discussion from the managing agent perspective. She's contract director for JLL and has a national oversight for a number of mixed use funds under the LGIM portfolio. So she works quite closely with Mark Tyson. And this involves, as you say, working closely with LGIM, JLL property managers and Bellrock as the appointed FMI, facilities management integrator provider. Keith Waterman is Executive Director of Real Estate at PRA Health Sciences and is representing the occupier. And he's worked in workplace and facilities management for the past 20 years, following a career in engineering operations, nuclear, radiopharmaceutical and life science manufacturing. And we were due to be joined by Tahira Hammond, who's Global Head of Workplace for 91, but unfortunately she has had a last minute childcare issue, so she sadly can't join us today. But I know know between us all we're going to have a fantastic discussion. We're not going to be doing presentations to start, just because some of the events that I've been involved in the past have involved lots of long presentations and not enough time for questions afterwards. So with this one, we're just going to kick straight off and have a bit of a Q&A. So please do put in questions into the chat function throughout the event, and we can get as much dialogue going as we can. So to kick us off, Mark, if I can start with you, why is this topic important to you now, both individually and as an organisation?
Good morning, everybody. I think before COVID, if everyone can remember those days, it was an ambition that we'd had within LGIM, certainly before I joined the business, to become more of a customer-focused business. I mean, it seems fairly obvious to me that the landlord-tenant relationship couldn't last in its current format. It needed to be disrupted, if you like, and it still might. But I think what COVID's done for a lot of industries, but particularly this one, is it accelerated some of the trends. And there's nothing like a good old-fashioned crisis to bring people together. And that's what we've seen, to be honest with you. So, I mean, I've been passionate for many, many years around customer service, and not just doing the same old things over and over again, and trying to flip it around and take a different perspective. And we'll come on to this later on. But for me, the opportunity we've got turning COVID into a positive is this piece around health and well-being, but flipping that into a conversation around what is a healthy space and what is a hygienic space. Obviously, that's never been more important. And then working together with tenants to demonstrate the value of that to their building users. So actually, I think suddenly the tenants need their landlords more than ever. And similarly, the choice in the market has never been more abundant to do different things with different providers, different types of space. Now the home is competing against the office as well. So actually the need has never been more for the landlords to become more open and inclusive. But similarly, I think tenants need that advice and guidance to provide those healthy and hygienic spaces, which I think is a really interesting need for both parties.
Lovely, thanks Mark. Stuart, can I pass over to you now? Why is
this
important for you? I know we've been talking about this for a while, but if you could just talk about why that's important to you now, individually and as an organisation.
Yeah, sure. Morning, everyone. So personally, I'm really passionate about using customer experience to drive the bottom line profit of any organisation. I spent my whole career to date working in the service sector on different sides of it and different industries. And I've also spent a portion of my time as a corporate occupier, and now we're representing the landlord and investor side. And ultimately, to deliver exceptional customer experience, you've got to really understand your customers and understand what drives them, what their challenges are, and build long-lasting relationships with them. So on a personal level, that's why it's important to me. You know, you can't do any role in a customer experience world without understanding your customers implicitly. And the better you understand them, and the stronger your relationships with them, the better the service you can provide them. And as an organisation, you know, we have to satisfy the needs of our investors ultimately, which are probably almost everyone on this call in some way, shape or form, who has their money invested in some of our products in some way. And so if we're going to keep you all happy, then we're only going to give you the investment returns you want if we're keeping our occupiers in our properties happy and the people who live and work in our properties. So as an investor, we've got that dual responsibility between keeping all of our investors happy. And the only way we'll keep our investors happy is by building stronger, better relationships with our occupier customers.
Absolutely. And Keith, from the occupier side, what's been your, why is this important? Why were you keen to talk today?
Good morning. It seems like I'm a single occupier this morning without Tahira here. There's not a one size fits all. So it's very difficult just to have this sort of binary discussion over landlord and occupier, because the landlord could be a representative of a fund, it could be a private individual, it could be multi-tenanted, it could be a single tenant, and there's so many variations that it's very difficult just to button it up in one go. But if we're talking generally, it's so much better to have a good relationship with your landlord. Of course, you want them to share in that idea of experience and that well-being for our people, having the facilities that they need. But it's in my opinion, it's very it's very rarely found, I would say. Pre-COVID, and I think certain pockets of excellence are getting better, but it's not a natural course for the general landlord group. So I'll start off at that point.
Okay, well, hopefully we can get some examples of where it does work well over the course of the next sort of 45 minutes or so.
I don't have any buildings with Mark or Stuart, I would say.
Okay.
To be clear.
Okay. So Steph, finally over to you as a managing agent. Why is this important to you?
I think it's really important that we learn the lessons from COVID. I mean, I think it's really pushed some positive relationships going forward. And I think typically before COVID, we would have really strong relationships with perhaps our multi-let officers and particularly the facilities management team. And I think that when the pandemic hit, we had to really push those conversations out further and challenge ourselves further. And as the team have said, really get to know our occupiers and get to understand their business as well and find out what works for them and how we can adapt and help them run their businesses and work more as a partnership going forward.
Okay. Right, I guess I kind of want to go back to Keith there. What's been your experience over the past year? Are you closer to your landlord now than you were before COVID?
I think I'm closest to landlords that were struggling with their mortgage, to be honest with you.
Okay.
Cash collection has been an important part of the landlord's repertoire over the last year. We've been in the fortunate position where we've been paying our bills. We haven't required any furlough. We've been as busier than anybody through the clinical research and clinical trials that have been going on. So we've been very fortunate from that point of view. You can imagine if you're in the retail sector, things haven't been so great. And I'm sure Mark and Stuart can talk about some of the difficulties they've had and difficult conversations they may be having with some of their tenants who have really struggled over this last year. As I say, I haven't been in that situation, so most of my conversations haven't changed a great deal. We did go out to all of our landlords just to talk about what their plans were. Some of those landlords were very receptive. Some were less receptive. There was a certain service occupier who was very receptive and very helpful. Not that anybody expected them to be, but they thought it was the right thing to do, and I agree. And that was good to see. One area that I would have really liked to see landlords take a closer look at was their service charge during that past year pandemic, because there's lots of elements in service charge, not just the day-to-day operations. The offices weren't being occupied, so there must have been savings happening. But most landlords were really waiting till the year-end reconciliation to look at the charges of the year and any rebate or credit, rather than considering that more up front, which might have been helpful for some of the occupiers at the time.
Okay, that's an interesting point. Mark and Stuart, can you give us an idea of your experience over the past year? Have you got closer to your occupiers than you were before?
I'll go first, Mark, this time?
Yeah, go on. Yeah.
Okay. So yeah, I mean, we started, similar to Mark, similar to Elgin, we started a program about 2 years ago to really start to get more customer centric and focus on our occupier customers a lot more. And the last 18 months has really accelerated that. I think it's fairly safe to say that our asset managers have probably will have had a lot more conversations directly with all of our customers in the last 12 months than they've probably had in their entire working career. A lot of we have so much of a better understanding now about what's driving our customers, what their challenges are at a corporate level, what their challenges are as individuals for the people we're generally connecting with. And what their short and mid-term strategies are in terms of their corporate businesses and where they're trying to achieve and where they're trying to get to. But as Mark said earlier, it's nothing like a crisis to bring people together, really, is there? And the need to really effectively navigate through that crisis on both sides, which wasn't just a financial crisis, but also an operational challenge in terms of how the workplaces were going to be running, whether that was retail, industrial, offices, whatever, in any of the different categories. Has definitely opened the doors to those conversations. I'm not going to say that we've had really progressive conversations with everyone because that's not the case. Obviously, some have been richer and better than others, and we're definitely closer to some than we are to others. And I guess those who have had more pressing P&L cash flow concerns are the ones we've probably got still a bit more work to do to continue to build those relationships. But we've been having conversations with them, and we've been actively working with them. So, and now we're starting to, as we're starting to emerge out of this, and things like net zero are starting to become on everyone's challenges as well. And it's not just about COVID operations. Then actually we're now starting to have really progressive conversations about how we can mutually work together to achieve our net zero targets and other things which are working around and coming around. So I'd say it's work in progress. It will always be work in progress, but there has definitely been a big shift. And we used to rely heavily on our outsourced property managers to run a lot of that interface on a more regular basis. And we've really stepped into that position now instead. So our property managers are still there, but it's much more of a active tripartite relationship than it was before.
Okay, that's interesting. And is that your experience, Mark?
Yeah, I think there's a number of interesting things here. I agree with Keith. It's not a one size fits all in terms of how it's affected people and the different types of buildings and so on. I think what it's done is, from a rent collection point of view and service charge collection point of view, it's forced the asset managers to have some difficult conversations with tenants they may not have previously known. And what's been fascinating to me is the genuine warmth that you can build up through this situation in terms of helping small businesses or helping any business actually that's clearly got a need, which we've done, which I'm really, really pleased with. And you can imagine the variety of tenants we've got. It's difficult to keep everyone happy, but I have to say, one of the sectors I was really impressed with was the leisure sector. I mean, as a group, almost to a letter, they've been much more strategic than some other areas of the market in terms of thinking about long term, how they come back from COVID, revenue sharing. And to take Keith's point again, we've worked really hard in leisure and retail in particular to reduce service charges, because that was where, certainly in the first lockdown, where it was brutal for organisations. So I think the trust that we've built up through being very open book, very transparent, asset managers being actively involved in the financial side of things, then has led to more positive, longer term relationships, which is really what we wanted in the first place, which is great. And then I think the other side of it, just to touch on, is we've seen probably a real recognition of what facilities management teams actually do. And that's not just the management, that's the cleaners and the security officers, and the level of warmth, if you like, and feeling from occupiers, particularly in multi-let offices actually, and shopping centres where there's big teams, to look after them and make sure they're safe, to make sure they're paid. Before the furlough scheme came in, there was a lot of active conversations about making sure those guys can stay safe and can feed their families, and some actually very human conversations, which then have led to more structured conversations on a fortnightly to monthly basis around how we manage the building, how people come back to work through the various lockdowns and reopenings. And a lot of my team now say that that's going to stay. So actually those relationships we've built via the asset managers, the property managers within our FMI setup, those are relationships that probably weren't there, if we're honest, before the pandemic, but now it's given our guys such a wealth of confidence and information, if you like, and the ability to understand what occupiers are going through. I think those structures and communication patterns will stay, which is really encouraging.
Yeah, absolutely. Steph, I mean, we've just talked. We've had the sort of landlord and occupier perspective there. As a managing agent, how have things changed for you over the past year or so?
I mean, we're definitely closer with both occupier and landlord. We were in the fortunate position that Legal & General had a shake-up of their facilities management and property management model. I think actually our change happened in February, just as COVID hit us in the March. So we kind of had a double whammy of everything at once. But actually, I think it really accelerated that model, and it really kind of changed the facilities management input as well, in that it lifted them from there. Well, it elevated them. And so again, going back to this tripartite approach, and I think that was really integral to how we responded to this pandemic. Because we had a real responsibility to protect our people that were still occupying the buildings, protect the service partners, but also we have a responsibility to protect the occupiers' service charge money and spend as well. And just going back to what Keith said before, I mean, very much at our properties, we looked at all the service charges and we considered where we might have an overspend or underspend. And we had a really difficult task of forecasting where that might sit at year end as well, and making sure we did have enough money to be able to pay our staff and all those frontline people that were there. But then it was just making those decisions to make sure we protected occupiers too, because we appreciated that they were going through a really difficult period. And, you know, again, going back to what Mark said, I think it just really accelerated those conversations, and we got much closer to both because we all had to have really honest conversations about what everyone was going through and how could we help each other.
I'm really enjoying hearing about this kind of focus on frontline teams as well, because I think sometimes we have these kind of quite strategic discussions about things, and we forget that at the end of the day there's a security officer, there's a cleaning operative who are there, who are, you know, as Mark said, they're humans, they need that discussion. I apologise for this background noise. I've got a very loud seagull outside my window here in Brighton. So we've had a couple of questions come in, which I think would be interesting to address now. From Steve Wright, he's asked, as occupiers adjust to new working patterns, does the panel think there's likely to be demand for more flexibility in leases in terms of size requirements and length in particular? Obviously, we're hearing a lot of stories in the press about people wanting to reduce their square footage. Who'd like to answer that?
I'm happy to tackle that first, Kathy. So I think what's interesting, what we're seeing in the market so far is a lot of interest in the 6,000 square foot and below market for offices. We're talking about offices specifically. Interestingly, on the leisure and retail and industrial side, there's a lot of deals happening in that space, people taking a longer term view. But in offices, it's been quiet at times, but it's picked up. But the bits that seem to be resonating, and I mean, some of this stuff is obvious really, but quality office space is still in demand. We've rolled out a managed service. We've really invested in some technology to really support air quality, and we're really sticking our hand up and saying we think air quality is something that should be independently audited and available for everyone to understand. And that seems to be resonating in the market, of saying, right, if we're going to have an office space, it needs to be high quality, it needs to be in a good location still. I don't think that's ever going to change, but we need to be able to trust that that's providing a safe space for our employees. So I think that will drive the market. Inevitably, yes, leases are getting shorter. They always were. You've got the serviced office market that are very competitive in that space as well, but that doesn't satisfy everyone's needs. So I think it's really pushing landlords to provide a more flexible offer, and it's probably going to challenge valuers as well in our space, who are very used to longer leases in offices, to think differently about service and retention and how we do that. And that's some of the things we're chewing over at the moment. But ultimately, I think my personal opinion is that we haven't seen the true fallout of COVID yet. We're still low occupancy in offices, 10, 20% really. I mean, in some of our, interestingly, in some of our buildings where we've got like a Regis type operation, we are seeing somewhere into 60 or 70% of occupancy pre-COVID. So that's really driving the footfall, that serviced office sector, which is quite interesting. That's in 2 buildings up at that sort of level. So I think as confidence returns, as people come back to the office, you're going to have that point where people flip back to more people being in the office potentially than at home. And at that point, I think the senior powers that be in these corporate organisations will need to take a call on how much space they actually need. But we're probably still a year or 2 away from the natural fallout from COVID. And in the meantime, it seems to me anyway, that these smaller, well-equipped, flexible spaces that people can move in and out quickly, they haven't got huge fit-out costs, they don't have to take 10-year leases, seem to be quite attractive for corporates, from what I've seen.
Absolutely. I guess there's just a huge amount of uncertainty, and the press is just full of predictions about what the future workplace will be like, but we just don't know at the moment, I think. Stuart, what's your take on this?
I think it's easy for me and Mark, who both work for large institutional investor or landlords, to say, yeah, you know, we're here, we can provide lots of choice, we want to keep you, we want to keep people within our portfolio and move people around as they ebb and flow. But you know, we're not the entire UK property market, and I think it's more challenging where you've got smaller family office landlords, or you've got smaller owners and investors who you're dealing with, who are landlords as well. So I think that we as fund of funds with multi-property portfolios and things like that can take a slightly different approach and view over how we structure flexibility and how we embed that within what we're doing. And as Mark said, the impact that has on valuations and the valuations of the portfolios than other smaller landlords can. So I think actually, I think that people are going to see a challenging couple of years ahead, as Mark said, as they sort out, as they decide, they decide what they need from their occupational strategy. And as they then start to have those discussions with their landlords, because some landlords can adjust and move faster than others can, and some landlords can be more flexible than others. So I think it's going to be a really challenging couple of years ahead for the entire industry.
Yeah, absolutely. So that this closeness of relationship, we very much need to continue over the next few years, really.
Yeah, I think so. I think that the more that occupier customers can share where their thinking is, and the sooner they can have those discussions and conversations with their landlords, the better the outcomes are going to be for everyone, quite honestly.
Absolutely. I mean, Keith, from the occupier perspective, are you looking to change? What's your kind of plans over the next couple of years? Are you looking for less space, more flexibility?
Let's go back in time a bit. I think that the world has been becoming more flexible for the last 20 plus years. If we go back to the beginning of time and laptops first came available to us, we could take the work home or carry it in our bag to a meeting or take a presentation with us. VPN came on stream and you could then connect from outside of the office. And that was really the start of that work from anywhere rather than always being held to the office. And there's been a move to a more flexible environment, particularly for progressive companies. You see it in a startup environment where everybody's doing everything anywhere, anytime, because you know, they've really got to put all of that effort into getting that business going. And as businesses mature, they become this sort of office wallet that you have this sort of varying needs and requirements and control in some ways that you see some elements of the business being very, very flexible, generally the more senior people, and some elements of the business being less flexible. And if I can be a little bit controversial, I used to say that there's 10 years of our dearly beloved colleagues that need to leave the world of work in order to get flexibility really working well, because that trust element between presenteeism and are you cutting the grass or are you actually working? And I think COVID has been a fantastic experiment in showing that everybody works twice as hard when they're stuck at home with access and with good technology, and the video that we've had, which just about came on stream in time for COVID to happen. It's amazing how close that video switch was in the ability of technology to give you good a good quality of conversation. So I think we've been on this flexible journey for a long, long time. And certainly progressive companies have been looking at their space. And if you talk to the interiors companies, look at any market leader or competition winner, and you'll see some fantastic internal spaces that aren't rows of desks anymore, with people having a variety of places to work and places to go. And it's just that bit between that trust of letting people loose to do what's right for them at whichever part of their life that they are in, because, you know, as a youngster, you might want to be there, you want to be seen by your boss, you want to have a fast track career. And the only other option is a shared room in a rather horrible, squalid bedroom back at home. And it's been horrid for them for the last year. And they'd much prefer to actually stay longer and have the personal free time and use of the network in the evenings and the free coffee and maybe some catering, so they don't have to do it for themselves at home. You actually might get them at the workplace for much longer. But then you come into a different stage of your life where you might have the children, and it's really important that, you know, you get to school to see sports day or to go and see them do their nativity sets or whatever it might be. And that needs flexibility without always having to take, you know, a full day off to do. So I think we've been on this journey for a very, very long time. I think COVID has accelerated it beyond recognition. If we think pre-COVID, you'd see a Google or a Twitter or a Facebook having a 1 day working from home or 1 week working from home exercise, and everybody would look at them in horror going, oh my God, how can you do that? Or, oh my God, I wish that was me. We've just made the whole world do it for a year and a half almost, and it worked fine. So I
largely,
think the can be there. But as we come out of COVID, I don't think it's a pigeonholed 1 day a week or 2 day a week. Or flexibility is about each to their own, for their own reason, for the right reason for them and for the business.
I think that's a whole other discussion, isn't it, which we might actually come on to later about how we manage that. I mean, Thanks, Keith. Steph, from your side, at JLL, what are you seeing in terms of trends? Are we seeing, more flexibility in leases? Is that what landlords and occupiers are talking about that you see? Certainly,
yeah,
obviously, the size piece.
I don't get involved in the lease detail. In terms of our occupiers, we're obviously seeing much shorter leases, and again, I think as Mark said before, people probably haven't quite yet made that decision. Maybe they've been a little more hesitant and just seeing how things will work out. I mean, certainly people, we're talking to our occupiers. I had an occupier meeting last week and they were saying, as a company, we've decided that we're going to be in Monday, Tuesday, there'll be less people in Wednesday, Friday's just out. Whereas others were saying, actually, we might be in the office a few days a week, but at half capacity. So, I don't think I've spoken to anybody that said that they will be back in the office full time every day of the week. But we're definitely seeing people want to go back in there and have that hybrid approach and have that flexibility. And I think, for managing agents, we've got to earn that commute. We've got to make sure those buildings are attractive to people to go back into, whether that comes down to your air quality or the type of coffee that we're offering in reception. What amenities have we got that people can't get at home and will think, actually, I don't want to stay at home anymore. I want to go back in the office space because I've got a community there and I've got my colleagues there and I've got a collaboration space. So I think we really need to think about, and we are doing, how these spaces work. And I think, again, that just comes back down to the communication piece about with the occupiers. What do they really want to see rather than what do we think they want to see, and making sure we implement that and work with them as best we can.
Yeah, I think that's really key, isn't it? It's a lot of listening there, because sometimes we have a perception about what people want and it might not be the case.
Kathy, can I just give us a flip side to the flexibility piece? It's just as a perspective, really. So our long income fund, which invests in long lease, long FRI type leases, it has never been as busy, quite frankly. And so while I think it is horses for courses in different sectors and different demands, but things like supermarkets and some of those areas, some of those sectors are really making long-term commitments and are really, really prepared to take on these long-term commitments now. And they're actually making those decisions now rather than kicking those cans down the road. So I think it really does depend on the sector that you're in and you're operating in and where you are. Yeah. Because some people are using the opportunity to really make long-term decisions because they are clearer on where their business needs to be than ever before. So it definitely depends on the sector and what you're looking for.
Yeah, and I guess we obviously have Keith here from more the pharmaceutical side of life, which has fared much better than other sectors during this time. And we've had a good question come in here from Alistair Yearley, focused on towards Stuart and Mark, saying that occupiers are becoming ever more demanding from the space they choose to occupy, and we've had a little bit of that already. Comments around sustainability, health and well-being, amenities, lease flexibility, technology enablement. How are you as landlords adapting your portfolio and choosing to allocate your investments to satisfy all or some of these needs? And actually, can you satisfy them all, or do you have to prioritise? Stuart, do you want to start us off with that? Yeah,
it's a great question, and it's something that I'm, having been a corporate occupier before in previous life before joining, heavily involved in trying to design great workspaces and find great buildings to enable us to do that and create fantastic employee experiences is something that's really I'm really passionate about. We're finding it really quite easy in our new development portfolio because we really are focusing on what people want. What does our marketplace want? Who is our target market for those properties? And what are they thinking? What do they want? And we're talking to them, quite frankly. We're talking to our potential future customers and our current customers and going, okay, if we're doing this, then if we're building this, then what would you be looking for? And we're getting great insights from that. So rather than previously relying on architecture, purely relying on architects and professional teams, design teams to give us that insight, or letting agents to give us that insight, we're talking directly to our customers now. And so we're starting to really, our development portfolio is all being geared around, occupier needs and customer needs, which is fantastic to see. as someone who struggled quite a lot as an occupier to find buildings which really reflected and achieved what we wanted them to achieve. It is harder in the standing portfolio where it needs quite a lot of capital outlay to achieve that upgrade. But it's about, for us, that's about return on investment. And the return on investment will come providing we're doing what our customers are looking for. If we're not, then we're not going to get that return on investment. So it is all, for us, it's all about understanding where our customers want, what they want from our spaces, and working with them and working with the industry, the support industries around them and design services to make sure we truly understand what those wants are. Because there's no point us developing new buildings or amending existing buildings if we're not spending that money in a way which is going to deliver what our customers are looking for. Yeah,
absolutely. Mark, what would you say to Alistair's question there?
Yeah, I mean, I've always thought that one of the real benefits of the fund structure is the access to capital. And I have to say, I mean, maybe I agree with Stuart. A new build, it's easier. The requirements are often easier to decipher, and I think we all know what a good building looks like from development these days. In terms of there's lots of feedback, lots of options. But for existing stock and potentially for me, where occupiers could leverage landlords more is getting better access to that capital investment. And I was just thinking when that question popped up, one of the things that I think is really interesting is this cloak and dagger piece that often goes through with occupiers and landlords, where if you look in any other industry, where you have a strategic relationship, you would probably share your plans 3-5 years down the road, and you would say, look, this is what we're looking to do. Mm-hmm. Whereas in property, it seems to be, well, we'll keep that to ourselves, and then we'll run a quick process with via agents or whatever. And I wonder what can be achieved through proper dialogue, both within existing estate and new build, where you're starting to align the product, especially within offices, but I think this also works with industrial, alongside what the organisation is trying to achieve. And I think for me, I mean, Stuart might have seen more examples of this. I still see a reluctance to do that. I mean, I agree on the long income side of things, there's been a lot of movement there. And for us in particular, one of the things that stands out for me is HMRC, where we've built 9 of their super hubs in the UK. And that's, for me, a massively interesting process where the occupier there has been very, very specific on what they want, and then used L&G's capital, effectively the pension fund capital, to get what they want for a long-term, high-spec environment, which is going to challenge them, help them meet their challenging net zero carbon targets and drive that amenity and health and wellbeing agenda. But that's through dialogue, many, many years of dialogue and commitment between organisations. So I guess in summary, my view is the capex is there, the will is there. We tend to be doing, certainly in existing buildings, speculative fit out of flexible space. And I wonder if we could be a little bit more tailored on that to really, if people tell us what they want and we're able to listen and we're able to do that, I think that would be quite interesting. And my final point on this, which is a bit of a reflection on the last question as well, is although there's in the offices lease lengths are coming down, my view is it's going to be, if landlords do this properly, it'll be more difficult for occupiers to leave those buildings. So although there is a potential break or an end of a lease, if you're really assisting that organisation on their net zero carbon agenda, because don't forget they're going to have to report that corporately, if you're really providing a health and hygienic environment, as I said earlier on, how would you ever be able to leave that building? If your team love it there, if everybody is got a real high level of satisfaction, if you're achieving your business aims, doesn't matter if you've got a 3-year or 5-year lease, you're actually very unlikely to leave that space. And I think that's an interesting dynamic for us as landlords is, no, we haven't got the surety of the lease potentially, but if you can demonstrate the retention and the loyalty piece and the product on the market is stronger than others, that I think is going to be attractive to investors in terms of attracting in and sort of driving the growth of those funds.
I like that idea. I mean, I think you've made some really interesting points about this kind of cloak and dagger piece. I really like that. But let's not do that. Let's just sit down and be honest and say, this is our plan, our 3-5, if we have it, a 10-year plan, and how you as our landlord fit into it, and that we want to be in your space so long as you keep delivering high quality space. So no, I think that's really interesting. I guess one of the things we've talked about here, and we've kind of mentioned it a couple of times, is this net zero piece. And there's going to be obviously an increasing focus on that over the next few years. But who pays for this? You've talked a little bit about there, Mark, about the role of the landlord in that. But who'd like to talk about some of these developments? Who's actually physically going to pay for this? Because it can't be all one side, presumably.
I'd like to hear Keith's view on this first, Kathy.
Well, of course, I don't want to pay for it. No, look, I think at the moment we're still at the early stages, and it's great to hear you talk about net carbon and your air qualities. But I think we're at the very early stages of just understanding what is that carbon delivery to your tenants, because we do find it very difficult to get that information from a tenant. We're trying to annually for the past 5 or 6 years meet our requirements and at the time European directives, and of course there'll now be UK directives in reporting our emissions and our year-on-year performance. And it's very difficult just to get the basic information out of landlords as to what's attributable to us. And particularly in the serviced office market, where it's almost an impossibility. It's not a complete impossibility. You can do a calculation to work it out as across all of the use of the building and have a reasonable adjustment. But it just seems like there's not even an answer there. So we've got to get past that bit, and landlords need to really do work with us. And I really support, again, the talk of landlords getting closer and agents getting closer to their occupiers, because the more we talk, the more we share, and the more we deliberate, the better the outcome is and the better that destination will be for our people. So that's really, really important that everybody listens to that as a landlord. But when it comes down to who pays for it, it's very difficult, isn't it? If you've got a building with a lifespan of, let's say it's got 40 years in it, and I've got a 5-year lease, is it right for me to have to put the full amount of money in that year it gets done? Or is it a reserve fund that is set up across the 40 years so that everybody contributes for the time that they're there? There's various models of looking at it, but I do think a lot of landlords look to try and depreciate almost within the, or cash flow within the year it's being spent. And that can be quite difficult for us as a tenant, because it's not really our business expense, it's theirs.
Okay, Stuart, do you want to come in here, give a response to that?
Yeah, I sort of agree with, I think I agree fundamentally with Keith. I think everyone has to pay something, quite honestly. I think everyone has to contribute. You know, if I think back over the conversations we've been having around things like rent concessions and things over the last 18 months, you know, then that has been a rather than assuming one's going to pay or the other's going to bear the whole brunt of the cost, you know, it has come down to actually, okay, so where can we meet in the middle, and what's right, what's actually the right outcome to take, and what's the right way of doing it. And those have driven out some really great conversations and some really mature, quite frankly, reasonable conversations. And I think the same has to happen in terms of the upgrade of the property stock across the UK. I think everyone has to pay a bit towards it, quite frankly, or else it's not going to happen. You know, if one group's waiting for another group to fund it and to do it all, it won't happen at the rate that they want it to happen at. So I think it's a case of having these mature discussions around, and you know, if you've got a shorter lease, you probably are going to contribute more in the short term towards that uplift than if you've got a longer lease. But again, you won't pay the whole amount. You shouldn't pay the whole amount. So it is. I think it is definitely. You definitely need. It's definitely all about the conversation, quite frankly, and the mature conversation and the open, transparent conversation around how do we make this work? We need to do this. How are we going to make this work?
Yeah.
I guess, Stuart, you can look at it from the other point of view as well, is if that investment and work makes you prime property with a better yield in your building, are you going to share that back with the occupiers?
Absolutely, but it also helps the public, Keith, because we're investing their money as well. So you know, that outcome actually helps their pensions grow. You know, there was so much in the press at the start of the pandemic around landlords need to make concessions here, landlords need to make concessions there. And you know, it's a very different approach if you're a fund of funds investor or you're an institutional investor versus if you're a private propco. And you know, all landlords have their own financial challenges, don't they? And what the outcomes they're trying to achieve are. So it's hard to take a one-size-fits-all approach to any of this, isn't it, quite frankly?
Yeah, I do take great sympathy with landlords over this past year, because the government have not been very helpful in ensuring your cash flow.
Steph, from your side, obviously sitting sometimes in the middle of this kind of tripartite relationship that we've talked about, where do you see, you know, what's your view on who is going to pay for this? Any kind of upgrade?
We are seeing a mix. I mean, we've seen landlords doing various projects to buildings, like putting shower hubs and things in where there's a big capital cost, and then maybe a little bit will go through the service charge, I think it really is on a building case by case, because it might be you've got a lot of voids in the building, and therefore the right thing is that the landlord pays a decent contribution because they're trying to let these voids, and they're also doing the right thing as well. But then equally, you know, you might have got some LED light fittings, that kind of thing, that, you know, small, low cost things. Or it might be having a conversation with your occupiers. And I think when you understand each other's goals as well, you can come up with a collaborative approach of how do we best approach this, because tenants have got their own corporate goals, and you know, our clients have got a big drive to get to net zero. So, you know, I don't think, again, there's a one size fits all. I think it depends on your asset, it depends where it is in its life cycle and what needs to be done. And again, it comes back down to those conversations about, you know, what do tenants actually want, what's important to them, and making sure that we are spending their money in the right way, because if they're getting what they want out of a building, then they're probably more happy to pay for it as well, rather than what we perceive that they want.
Yeah, absolutely. I guess it goes back to having, as you said, those honest conversations. We've had a good question coming from Andy Christmas, really developing that sustainability angle. How do Mark and Stuart see landlords' engagement with introducing more green lease language going forwards in support of occupiers' own CSR targets? More willingness to write auditable elements into leases going forward?
Yeah, let me pick that up, Kathy, and a couple of thoughts on that previous one as well. So for me, crikey, it's a difficult area. I think that there's two things that's going to happen, right? One is that the corporate agenda is already getting there, is going to become much more focused around its carbon footprint. I mean, there's a lot of talk about that as well. I think Keith makes a good point, the data's got to be better. And then I think the other thing that's going to happen within the next 5 years is that the legislation from the government on landlords in particular will tighten. I mean, we've seen this elsewhere around the world. I think it's reasonably inevitable in the UK that these scope 3 emissions, they're going to say to landlords, well, you've got to take more responsibility for that. And I think that creates a number of issues. One is tenant mix. So take industrial as a really good example for me. You could do the next 3 or 4 years of really good energy savings initiatives, getting rid of waste, like just trimming the waste on the buildings. And then all of a sudden you want to charge, somebody moves in and wants to charge 300 vehicles a day. So all of a sudden your net zero carbon agenda gets pushed out. So I think for me, the real elephant in the room, and I suppose the word's not coming out, is renewables. Who is going to pay for local power grids around industrial parks? Who is going to pay for the PV and all the different technologies that are inevitably going to flood the market in the next 10 years on an office building? And the reality is, for me, there's going to be an element of service charge where you can demonstrate the benefit, as Steph says, but ultimately the bigger infrastructure stuff is going to have to be a landlord investment where the value is either seen in the premium rent, because going back to my first point, if you are one of the few buildings in an area that can have a positive impact on somebody else's net zero carbon agenda, you're going to be attractive, and therefore there's a premium for that. And then I think the final thing for me is this: we've got to get more comfortable, and partly, hopefully, out of COVID, this is the sort of thing I touched on earlier, this trust piece, that we can work together on this. I mean, big corporates will often say, hands off landlord, I know what I'm doing in this space, especially in the FRI environment. And then you've got the other end of the spectrum, where you've got SMEs that might have 10 employees and got absolutely no idea what they need to do to hit that agenda. So as a landlord, we have to be, we have to wear both ends of that line really, really well, and actually support the SMEs and help guide them towards how they buy their energy better, how they use their energy better, tapping into renewable sources that inevitably landlords will bring on. And then with the corporates, really work hard to say, right, how do we do this together? How do we link our expertise and drive value? Taking Keith's point, bearing in mind that occupier might only be there for 5 or 6 years. So that's probably a combination of expertise and capital, with the capital coming from the landlord. But it is early days. I think there is a huge amount to do. And just to finish back onto that question, we need to be stronger about enforcing the green lease clauses. Far too often they come out in the negotiations. Right. We have to be bolder and say, right, actually, this is important. We must share data. We must work together. We must agree the principles of data sharing, energy savings, use of renewable networks at the point of lease, signing the lease. And I think that's going to be fundamental going forward, but we're not quite there yet.
Okay, yeah, that's interesting. Stuart, have you got anything you want to add there?
Yeah, we've been looking at our lease structures for quite a long time for multiple reasons, really. One making it easier to actually get a lease over the line and to get it done. and make it less contentious and less expensive for both sides, quite frankly, to negotiate a lease. And also because of the emergence of green leases and clauses we're trying to get into there. And I think it's just an ongoing evolution, quite honestly. You know, some people are we would rather have more green clauses in our leases. And as Mark said, ultimately, a lot of these come down to some negotiation. And I think what will happen over time is people really kick into everyone trying to achieve the same thing, because that's it. Ultimately, everyone is trying to achieve the same thing here, maybe slightly different timeframes to it, but every organization has to achieve its targets. Then it will become this, they'll just become the norm, I think, pretty quickly. But I think we're just in that transitional period over it still being a negotiation.
Yeah, absolutely. Okay, we've got a good question coming from Sally Marshall saying, we are seeing lots of owners also switching to other asset types, for instance, life sciences or industrial. Is this directly related to some nervousness around central cities office market, or is it about more pent-up demand after potentially less spending in property investments over the last year? Who'd like
shall I go first on that?
Yeah, go.
So we're actually switching our investment focus more to broader real assets, even rather than just real estate. You know, we're the emergence of infrastructure projects, the emergence of infrastructure debt and equity is to fund everything we've just been talking about, is a phenomenal opportunity in the marketplace, and is a real growth business in the marketplace. So we're starting to look at real assets as a whole a lot more as the investment class, as I think Mark and Elgin are as well, and other organisations are, because we see this as a business as our major growth side, quite frankly, is from investment business, and then because investors will see the benefit of being able to invest in excuse me, multi-fund businesses, multi-funds, multi-asset funds, which tie it all together, and we're starting to look at it as one altogether. So if we're investing in a renewable energy plant, then how do we make sure that ties into the benefit into our real estate equity portfolio? You know, if we're investing into an EV charging company, how do we and lending them money, how do we make sure that we get the benefit from that in our real estate equity portfolio? So we naturally look across all industry types anyway, and all customer types anyway, but we are now broadening that lens even and looking at the whole real assets portfolio, and how we can make sure that one aspect of that is supporting the other aspect of it throughout the life cycle of assets.
Okay, Mark, is there anything you want to add on that side?
Not really. I think the only thing I would say is that the benefit of essentially the pension fund piece, you can take a long-term view, and we have quite a long-term positive outlook on city offices of quality. So yes, we're doing hotels, all the stuff that Stuart talked about, more operational assets. I'm in a build-to-rent asset now. That's a huge asset class for us now, and an investment opportunity. So I think diversification is probably the key, but we're still reasonably positive about city centre offices over the long term if they're of quality, and I think that's probably the key.
Yeah, I think you've talked a lot about quality properties there. As we move into the last kind of 5 minutes or so, I'd just like to ask each of the panel, and we've talked quite a lot about listening to what occupiers want, good communication, dialogue, trust. Can I ask you to each give one or two things briefly on what you would like to see change between landlords and occupiers in terms of that relationship, and how we could improve that relationship if we want to kind of create this blueprint for future success? So Steph, can I kind of start with you? It might be something you've mentioned already, or it could be something new.
Yeah, I think, you know, being open and honest with one another, and I think knowing what each other's common goals are, I think better together and better stronger. You know, I think we just touched on before, I know it's something Mark and Stuart are really keen on, and our operating model and how we engage with occupiers, and both those investors have really challenged the model and how we work, and I think it's really accelerated our relationships going forward. And I think it's just, for us, it's really building on that, you know, and just innovating together and just making sure that we're all really aligned in what we're hoping to achieve out of this. And for us as managing agents, working out how best we share that information between landlord and occupier, and again coming up with feasible solutions to it. You know, I think there's a real pressure on us just being innovative, and for a good, strong managing agent, I think we've got some real value in that. And I think, people are always happy to pay for things as long as they feel like they're getting the value for the money and they're looked after and supported.
Yeah, I think that's true, isn't it? If you're happy with what you're very happy to pay for it. Mark, can I come to you? A couple of things that you kind of see as the future for success or key for success.
I think it boils down to one simple thing, actually. I think senior people within occupier organisations and their equivalents within landlord organisations need to give each other more time. I think through COVID, the operational contacts are closer than ever. The trust is there. I can see that every day when I go to buildings. But the next level up, the sort of cloak and dagger, the game of poker type analogy I used earlier on, if we give each other time, I think that actually we'll get better outcomes both sides of the table, better quality assets, better closer and quicker alignment to net zero carbon. So yeah, I think it just comes down to time. Give people time, talk about the important things, talk about the difficult things, and I think naturally those partnerships will emerge, which benefits all parties.
Yeah, brilliant. Okay, and Keith.
No, I agree. The engagement has got to be the piece that takes us forward. It's very much what we're doing with our own employees as we get through the COVID pandemic, as it was before, and as we will after, in understanding their needs on a daily basis and as life changes for various reasons. So that engagement is really important, but not at the situation where it's a fait accompli. You know, it's engagement about the future, it's engagement about the now, but not just engagement because one side or the other has a problem. So it would be nice to actually have that regular dialogue is maintained post-pandemic. And I must say, I really like this idea that I might go to the market looking for a particular landlord building because it is so great.
Yeah, I think we probably will see a bit more of that. Finally, Stuart.
Yeah, so I think that we need to have a look at the training and where people come from and the experience and what the training they're given, who work in the industry as a whole, and make sure that the education is about emotional intelligence a bit more. And it's not when we talk about negotiation, it's about negotiation through through relationships as well. Yeah. Because there always will be times when it becomes about a price, and it's a really hard negotiation. Mm-hmm. That will always happen at some point during the relationship. But it's about being able to step back from that as well and maintain strong relationships while being able to also have those difficult conversations. And I think it's a maturing. I think that'll come over time, but I think we should also look at the education which is provided to people who generally end up in our industries and work through and become leaders in our industries and operate in it, to make sure that language is changing right from the start. So I think those of us who are currently working in it and those of us who have been working in it for a while are sort of emerging that way. I think we also need to focus on the education of the people who are coming into the sector as well, and make sure that this is being definitely built in right from the start.
That's a really good point there. So I think we've just in conclusions, we come to our last kind of minute or so. I think we've roughly put together a blueprint. I should say that we'll be following this up with a piece on LinkedIn and actually also on the Cornet website, which will make sure you all see, which will set out some of these points and see, describe what the kind of blueprint could look like. But really, it's about listening to occupiers and perhaps landlords developing developments accordingly. It's about talking. We've talked a lot about we need to listen, we need to talk more. More flexibility, obviously that depends on the type of landlord, and not all landlords are going to be able to do that. I love Mark's comment about the cloak and dagger. We don't need cloak and dagger. We need to really share our long-term plans with each other and hopefully come up with sort of a mutually agreeable solutions. We need to trust. Steph talked there about knowing each other's common goals, being stronger together. Mark's talked about senior people in occupiers and landlords giving each other more time. Keith talked about engagement a lot there and really everybody knowing what each others are doing. And Stuart finally mentioned about the training of people coming into our sector. So yes, we have negotiation training, but also bringing emotional intelligence into that. So as we just hit almost 9 o'clock, I'd just like to thank you all for joining us this morning. Some interesting questions there from the audience. Thank you to our panel, to Mark Tyson, to Stuart Cranner, to Stephanie Moore and to Keith Waterman for joining us today. Enjoy the rest of your day.